Let's get in Tushar Pradhan, Director of HXGON Partners LLP, who joins us on the show. Hi, Tushar. Good afternoon. Thanks a lot for joining in. How are you feeling about the Indian markets? After seeing 21,700, we have zoomed to around 25,000, 21,500 to 25,000. All of this in a matter of a few months. Earnings are yet to pick up. What would your outlook be on the headline index first, on the Nifty, for the remainder of this year? Do you think we can build onto this, or do you think we're getting a little stretched on the upside?
Yeah, it's an interesting time to take this review, Nigel. And I think what is important to understand is while the move has been very sharp, you have to remember that there were reasons for this downturn in the markets as we saw it due to geopolitical reasons, etc. So it is just not the up move, but you have to calculate, what we have done actually from the start of the year, which is not much. So I think that largely reflects or discounts the kind of flat earnings that we are likely to see for FY25. We've seen most of the results come out. I think some of them are a little mixed. But I think going forward, what is going for the market is that FY26 and then on that 27 is likely to be a very significant base impact on earnings growth. So reported earnings, in my opinion, are going to be fairly strong going into the next financial year, and we'll start to see that impact come in the first few quarters of the reporting season. So come June, when we will see the first quarter of the next year and into September, I think there's going to be a lot of momentum which will build on earnings, and that's why I'm pretty positive on the index itself going forward for the rest of the year from here.
I remember you saying that perhaps you won't be surprised if the index goes back to all-time high levels towards the second half of the year, towards the end of the year. But Tushar, in the earnings season so far, or generally, given the geopolitical shifts that we've seen, have you observed any new trends which have emerged that you'd like to highlight, which can make it to your portfolio? There is a play on it.
So, I mean, there have been some trends which we have been following for some time. So one of the things, of course, as we spoke about, has been manufacturing. Essentially, what we're talking about is 6.5% GDP growth sustained over the next 2 years. If that happens, that has a natural impact on process industries, on manufacturing, on capex in general. So I'm very positive on the capex cycle picking up in the next year or so. What the last year gave us was a little bit of an uncertainty around where the election came around and capex from the government came off a little bit. And we saw that reflected in the overall GDP numbers. But I think that is all behind us. We are also now coming to a fairly good conclusion in terms of what the yields are likely to be for some time. So the confidence that private capex has is on two counts. One is on general demand conditions, and second is the cost of debt and the cost of capex going in. I think in both terms, it looks a green signal from my perspective. Demand is likely to continue to pick up from here. And if we were to believe the GDP growth estimates, given that our interest rates are unlikely to go up from here, and as a result of which, we will have a very significant situation where it gives us a lot of impetus to think that general manufacturing, I would say central or core industries are likely to do well. And I would take a further bet in terms of Atmanirbhar, or what would you call as domestic manufacturing going forward.
Okay, all right. Tushar, I wanted to ask you about, these various China plus one themes and that entire focus, that India could be a potential beneficiary. We have Dixon that came out with a set of numbers. The space clearly has a big runway, but the valuations look expensive. From this entire shift towards India, what are the themes you like? Whether it's EMS, whether it's chemicals, CDMO, what would be your topic?
I think some of those are already prevalent, and we can see them already in the valuation, as you mentioned. I think some of the new ones, which we don't yet know, are likely to come more in specialty chemicals. I would still also bet a little bit on manufacturing and engineering, because in the past, what we have come to believe that large-scale manufacturing is really not replicable in India as it exists in China today. So we all know that Chinese manufacturing is absolutely world-class, and it has a potential to mass manufacture high-quality technical, or I would say technological products at a large scale. Now, to say that India will be +1 in that area in the past used to be a question mark. And I think that is what is changing at the margin, of course, but not significantly. I would think that, going by the headline about the iPhones being manufactured in India, I think that's a signal to say that now India might look at large-scale manufacturing, not really the lower end of the manufacturing like textiles or whatever, but I think the higher end of technological manufacturing, which is mass in nature. I think that is something that we are likely to see. Now, there may not be easy listed options there, but I think if you go down the supply chain a little bit, I think there might be some interesting opportunities there. So that's something which we are really very keen to uncover. The other themes on China +1, I would think, would be reducing the concentration risk that most of the OEMs may have. So it could very well go into automotive parts, components, and even to a certain extent, electrical components, which some of the manufacturers, the MNCs, already are existing in India, and all they need to do is to just expand capacity. So I think there is a plethora of these sectors which are opened up, but we will, of course, have to wait and see which companies actually come forward, put capacity, and offer a credible China +1 opportunity.
Got that. What have you made of the banking or the broader financial earnings so far? Today, we're awaiting numbers from IndusInd Bank, and that's going to be watched, if there is some sort of can of worms hidden there. But when it comes to the financial sector, what are your thoughts on the earnings?
I think the whole banking and financial sector, and I'm talking largely only the lenders here, has been taken, a little bit of a backseat, if you realize, in the last, I would say, even over a one-year period. And I would think that maybe the gloom that we felt, and it began with the microfinance bubble that we got seen a little bit of a bust off. We saw large private banks struggle to grow. We saw difficulty in raising deposits for the public sector banks, etc. But I think all of that is behind us. What I do feel going forward is that the growth, again, largely dependent on the GDP estimates going forward, is likely to ensure that our banking system will have adequate capital. They do not have too much of a charge on their capital. Their book sizes are extremely healthy, one of the lowest NPL ratios that we've seen for decades. And this ability and willingness to lend has come to it. Deposit growth has picked up. So all of this really looks to me like very, very combustible powder, gunpowder as we call it. And I think all it needs is a spark of sustained demand. And I think you'll see a turnaround in lenders per se going forward. So I think all of the bad news that we see probably already is in the price. If you look at average valuations, they are now well below median, especially the private banks as well. So I think I would be fairly positive, but not really overweight here. I would wait for some select opportunities to come up.
Any view on IndusInd Bank? So much of bad news. Bullish argument is it's trading at XYZ as a 0.0 times book value, and then suddenly you get some negative news. I mean, what's your take?
Well, I would defer to speak anything about specific stocks. I would just say I don't know.
Okay. All right, Tushar, appreciate you joining in. We'll have those numbers out later today. And as we speak, the stock seems to have cut some of its losses. But good to hear your thoughts, Tushar. We look forward to chatting up with you rather soon. IndusInd Bank, though, just pull up the intraday